And as you can see, the banks are moving rates up. I mean, Stephen, they've got to do that, don't they, really, because they said that they were going to move outside of the Reserve Bank cycle. So really, they have to keep doing it just to get everyone used to it.
Well, I think there's a sort of tactical issue about getting people used to the idea that, yes, the banks set their own rates independently of the Reserve Bank. But there's also a fundamental reason that the wholesale cost of funds, while it was falling a little bit earlier in the year, in recent times it's gone back up again. And it's certainly significantly higher than it was, say, in the middle of last year. And so there is a funding cost margin type issue there. Plus, they know that there's a RBA board meeting coming up next month, start of next month, which almost certainly will cut interest rates. And this is a way of making sure that they cut interest rates to absorb any increase from the banks.
But it's the Reserve Bank obviously will only influence deposit rates, which are about 60% of the funding base, and the rest of it. How much of the rest of it is Europe?
Well, 40% of the funding for Australian banks is offshore and 30% of it's in Europe. So Europe is where the cost pressure is coming from, because basically the banks over there are jacking up their rates. The risk premiums that's being built into lending to Australia is increased, and it's probably about we're probably paying 170, 190 basis points over the European LIBOR rate for our borrowings.
But it's not reasonable. Listen, I mean, Australia's AAA, the banks are AA. I mean, they actually should be lowering their rates to Australia, because it's hard to find decent credit risks in the world at the moment.
Yeah,
that's my argument.
But
anyway.
from the view from Europe, they've been in recession and in this crisis for so long, is that it's all about to happen to the rest of the world tomorrow. So Australia's got a property bubble which is about to burst, and therefore they don't want to lend to Australian banks, because we're about to experience what they've been living for the past 5 years. That's the European mentality.
And I think we're also seeing something quite interesting happening as well, because as the banks are moving independently, and increasingly we're getting used to them moving independently of the Reserve Bank, I don't know if you notice that the level of noise coming out of Canberra is ever so slightly just dimming. Because it was always that sort of great problem, whoever went first was going to be sort of stuck out and just, sort of thrown or shot by Wayne Swan, etc. But if this is happening every month, that sort of loses its momentum for the government to keep harping on about it. And I think that was part of the strategy, and I think sort of it's working a little bit.
Also, I think the anti-bank rhetoric's fallen a bit, because every time anyone from the Reserve Bank has put their head up anywhere to give a speech at any time, they've said the banks are justified in doing what they're doing. And it makes it very hard if you're the Treasurer to keep saying, oh, the nasty banks, they shouldn't be raising their prices.
Yeah,
when the Reserve Bank's saying, yes, we understand that they do, and by the way, we take that into account when we set official rates.
That's right. So they're actually, now they're in part responsible for the Reserve Bank lowering their interest rate. It certainly doesn't help if you've got a mortgage with ANZ, for example.
I can tell you what, I wouldn't want to be the Reserve Bank's PR man if they don't cut rates next month, because, there's such a groundswell around Australian industry for rates to be cut. If they don't, I mean, the cries are going to be tremendous.